I'm switching up my approach. I want to show y'all how I'm going about this. Now, this is something new for me. I'm going to be testing it out and kind of seeing how it plays out, right? I want to get into Spirit. And the reason why I want to get into Spirit Airlines is because there's a good opportunity for it to be bought out by somebody, by another one of these airlines. One of these airlines decided to buy, they were going to merge. That's kind of what I'm hoping. I dabbled into day trading. I'm not going to stop day trading. I'm just going to cut back on it a little bit. I'm going to just relax on it. And I figured out that, cover calls and buying or selling cash secure puts, or is it buying? I don't know, one or the other, is very lucrative, right? So we're going to go to Spirit Airlines, and with technical analysis, this makes your life so much easier, right? So we're going to go ahead and tap in with the 1 day and see how the 1 day is moving. We hit a bottom and we're kind of growing from the bottom. That's okay. I'm not really worried about it. I want to get into Spirit Airlines at probably the cheapest possible point, right? And it may keep going down, but it's only $1.86 a share. What maybe a year ago, not even a year ago, bro, at the beginning of 2024, it was at 16 bucks. That's a lot of room for growth. Even if I can catch half of that, that'll 8x whatever position I'm in, right? So that's kind of my thought process. I don't expect it to go to zero. It's just one of those things that it's an airline company, right? Like, another airline company would buy this out, and it's something that I'm willing to sit on for a while, however long it takes. I'm currently in 250 shares. I do want to buy 50 more shares so I could do another cover call, and I do have one cover call going right now. And all it is just my stocks that I currently hold is going to earn income. I'm learning these different strategies of how to take money that you're making from trading in the stock market and make it make money for you while it's still making money, right? So you're optimizing your positions in these companies. Now, not American Airlines, Spirit Airlines is not something that I want to be in forever. It's just something, if it merges, then, this might be a gold mine for me. You know what I'm saying? So what I'm going to be doing is, first of all, I want to be able to get into it, right? So I'm going to go ahead and do a cash secure put. 175 is here. I would like to get into it at 140, but I'll play the game. I buy this contract. What happens is, this is me selling a contract saying that if Spirit Airlines hits 175 by the time this contract expires, I have to buy these shares. So I lock up my capital and I have to buy these shares, which I'm 100% okay with buying Spirit Airlines at 175 because it will, one, lower my cost average, right? And then also, I'm in this for the long run. My expected profit and loss is $35, but plus 35. So I'm going to collect the premium if Spirit Airlines is not at this price. But if it does hit that, I still get to collect the $34 premium, but I also get to buy American Airline at $175 a share. So it's a win-win for me, right? So I said $175, $1.75 per share. Sorry. Okay, so I wasn't able to get into that cash secure put. I got into a different one. Now this one may hit, but I'm thinking about rolling my position. Now I have to change my account because currently I'm on a cash account. So I have to change it into a margin account. And I don't know if there's like a huge process or not. The only thing about margin is if I change it to a margin account, I can't day trade. So, but I can roll my position. We did go ahead and get 2 contracts, and the sale price is 185. So by Friday, which is October 11th, if Spirit Airlines is above 185, I will be able to collect a premium. If it's below, I will have to buy shares at 185, which I'm okay with. But if it is below, I'm going to roll it out and I'll be able to collect more premium, right? So, and I'll be able to roll it out into a further date, but then also along with the further date, because now it says October 18th, I'll be able to get a cheaper price and I'll be able to collect more premium. So it's a win-win for me because I don't really want to get in at 185. My intentions was to set this up. And if it doesn't hit 185, if it's above 185, I get to collect premium. If it does hit 185, I'll roll it. It's a little bit to understand, but I just want to go ahead and put that out there to y'all. And I want to make sure you guys were clear about that. Essentially, there is no risk as long as your average cost value is below the point that you're selling that contract for. This contract may expire. They would have to spend $600, right? I'm only in $180 per share. So I'll get to sell at $2 per share. So we'd make $60. Not only do we make the $60, we get to collect the premium. Now, I think the premium on each of those, when I first started, the 2 contracts was $14. So we'll collect a $20 premium regardless. So we would make $80 by just having Spirit Airlines at 180, right? And we said we were going to sell it. Now, if it doesn't happen, if Spirit Airlines is at $2, is below $2, then we get to keep our shares and we still get to collect our premium, which our premium was what, $20? And that's just more money you get to have for holding your shares. So it's a little bit complicated and confusing in the beginning, but just do more research on cover calls and selling cash secure puts. I want to be in this position with more shares. I want to get to at least 1,000 shares before Spirit Airlines start to do some funky stuff, right? So we still got $394 in buying power. We got some money locked up. We got more shares locked up. Kind of give you guys my thought process on what I would think is a more longer term investment. I'm still going to be trading stocks, like day trading, maybe swinging. I'm still going to be doing that, but this is more of my long-term approach. And I know people are going to say, well, what if it goes to zero? Then that's the risk you take with investing, right? You could use cover calls for more safer companies, but I like the aspect of having a small amount of money, being able to make income on that small amount of money, and also being able to get positions in companies that have potential to boom, right? So if this company didn't have potential to blow up, then I wouldn't be getting into this. I wouldn't be trying to get in so heavy, but because it does, then yeah. And when I say blow up, I just mean someone could potentially merge into it and buy it. And then that's going to make the share price go up. And then maybe not instantly, but the hype may make it go up instantly, but over time it still will go up. So that's where I'm at with my long-term positioning, trying new trading styles, trying new ways to position myself in with making money. And with the puts, is kind of like you have the money to get into a position, but you're just patiently waiting. And if it doesn't hit that mark for you to enter, then what you can do is make income while you're waiting. And that's essentially what's going on. So if SAVE doesn't get down to 175, I'm going to make an income. If this actually goes through, I would make an income, which is what I think it was like $14, $9, whatever it is, but you make $9 on your money that you wanted to spend, but the price is not there. And you just keep rinsing, repeating it over and over and over again until it hits that mark. And sometimes for some people, by the time it hits that mark of their entry, they've already made half of the money based on selling the puts. So that's just a thought process. This is still the first 2 trades that I've put myself into this. I'm not trying to teach y'all. This is just more of a documentation.